Hello friends, welcome to my channel and thanks for watching this video. Friends, as one more Friday has gone by and we are staring at the next week with a full of earnings report. So this is going to be a very interesting week which is about to come. So hello friends and welcome to another session of USA weekly market report. Now in my past video, in the last video I have talked about the chart and I have basically focused on the current price situation and movement, but with the surprises we have as far as the markets and overall trend is concerned, we have different scenarios that are evolving and that will probably evolve going forward. But those who are watching my videos for at least 1 year or more, so they have specifically understand that what was the situation, and more specifically I have talked about banks and financials I think 6 months back. So I've been saying this, that look at the financials. This is going to be the sector which will be in focus, and in this quarter you have seen all the major banks have performed in a very big drastic and most of most of the banks have outperformed and they have beat estimates on different parameters. So there is a lot to be checked this week. So first of all, the Dow has moved quite staggering. We will check out the stats. Let's check out some of the important news that will probably impact the market. Now this is not about the crypto, but as you can see, the Bitcoin future ETF in the US is said to be trading next week. It simply means rest of the things, keeping rest of the things side right now, that this is going to stay first, at least this cryptocurrency is going to stay and the price will stabilize. Now, one more important news is this one, where the US to lift a travel ban from November 8th, allowing vaccinated international visitors into the country. So this is going to be one of the major boost as we have approached in the holiday season. So all the tools, travels, gaming and casino and rest of the things which are related to leisure and transportation, everything is going to move after this news, because this is going to be a major economic mover. Now, while looking at the positive things, you should also understand that there are lots of things, or I would say each and everything have started moving and started moving in a very big rise. If you're talking about oil, if you're talking about yield, and you will see that the dollar is very firm, okay, and we have a looming energy crisis which will push the inflation as well as the demand of power uh, in the upcoming months, I would say, because there are lots of drivers which are working against it, against the stock market and for the energy prices as well as for the inflation. But the big thing is, if you are getting inflation along with the growth, people generally focus on growth rather than on inflation. So these are the major things that you need to look at. So let's go and check out what's going on. So if you are looking at the all the indices or all the major financial instrument closed on Friday, as you can see, 35,000 is again on the charts for Dow Jones. Nasdaq near 15,000, 4,400 for S&P 500. Gold is not down, it is just flat at 1768. Now oil, you can see 82.66. Then you have 10-year treasury which is 1.57, and we have let's go to the US dollar index which is near 94, and it is steady and firm. But my main concern is about this treasury section. Why? Just look at this 2-year treasury move, okay, or let's check the three month this treasury move. Now you can see there is a substantial amount of rise from September 21st of September 2021 till now. It has probably point from 0.24 to 0.51, so it has probably doubled. Okay, so and one more to look at is this one, the 2-year yield. It has jumped quite substantially, as you can see. This is a staggering amount of rise, which you can see in the past 2 or 3 months or even 6 months. So as you can see, from the lows of 0.14, or probably if you are looking at the 1-year chart, so from the poise of 0.10, it is now 0.40, which means a 300 basis point worth of rise we have seen in the short term yields. So when short term yields are moving up like this, then the short term yields are moving but the long term yields are not. It means there is uncertainty, or there is a risk which is evolving in the market. I'm not talking about anything positive, negative. What I'm talking about is all the scenarios that one could probably look at while analyzing the current up move. Okay, because this is just trade until and unless the interest rate actually started moving, and for that the US Fed need to react. Now let's go to the US 2-year bond yield. Okay, let's go to the bond and check. Yep, so this is 2-year yield. Now you can see the way the yield is moving, substantial amount of move, because it has fallen quite drastically from the highs of 3%. It has ended up with 0.10. Now if you are calculating the move, we can't calculate percentage, but still this is 274% worth of move. And if the yield, the way it's moving, so the way the yield is moving, it has crossed all the major resistance levels. So here we are, the way it is moving, and if it continues to sustain above 0.40, 0.39, 0.40, the next target we will have here is this red line, or the 200-day moving average, which is 1.29 or 1.3. So although this is just a retracement, or the yield are moving higher in the short term, but with such a strong move, and technically this is a very positive pattern. As you can see, this one is a rounding bottom. So the move worth, and if it hits 1.29, 1200 basis points is going to be substantially high for the market, and this is the risk which is evolving, or which is brewing right now. Okay, so even though you will see quick gains, you also need to understand the things which are moving or which are going on right now. Apart from this, the next chart that we are going to look at will be, this is the price chart of Dow Jones. So you can see there are some big moves from the lows of the range, but still we have some more to go as far as the upside is concerned. So what you can see over here will be something like this. So let me show you the range first, so that you can have a sense of how this has been moving. So this is the overall range, and if you want, there is one more in the middle. So what we have here is 35,000 as your first support, then you have 34,724, you have 34,148, and the downside support of 33,757. On the upside, you will have your resistance at 35,643. So this is the range, and until and unless it will start trading over 35,650, this is going to be a range bound move. So I don't want to comment much beyond than this one. Then let's go to the Nasdaq and let's see. So Nasdaq, as usual, this is a high beta index, but because the yields or the short-term yields are moving quite higher and with a rapid pace, you need to be very cautious about it. Let me tell you, because high beta moves will impact you both the sides. So as you can see, this is the daily chart and how it looks like, and this is the range. Okay, and as far as the movement is concerned, we have 14,326 or 320 as your lower end of the range, and on the upside you have 15,740 and 15,940 or 16,000. So this is the range that we are looking here, but this is anyhow the range. At least in Dow Jones you will have a range bound move, but as far as the Nasdaq is concerned, you will have a range in between which the price movement is happening, and it looks much more easy when compared to Dow Jones. So Nasdaq looks much more easy, and at least you can have the visibility that it is moving towards the upper end of the range. Now let's go and check out the WTI crude, because everybody is thinking that it's going to be so the upside is over and all those things, but this doesn't looks in the same way what people are thinking or what they are saying. So the negative days are over, and probably this was one of the opportunity that that most of the people have missed, because you don't understand, because when the oil was so down and it was trading in negative just for a couple of hours a day, but people thought that what's gonna happen, and when we have so much cheap oil. And now you can see, if somebody has taken the trade at 18, 17 or $18, or at $9 or $10, now it is trading an 800% higher. So commodity moved up by 800%, put a significant amount of pressure. So what we have here was the resistance we are of 77 or $78, and now the WTI crude is trading above 82. So a breakout has already happened, and the next two probable targets that we're gonna look at in the upcoming days and weeks will be 93.12 and 109.68. So these are the levels that we're gonna look at going forward, and don't be alarmed, because understand this, and it has happened in the past. When we are in bull market, everything will move up, prices will move up for each and everything. So do understand this thing, and there is no denial in the fact that this is going to happen. Even somebody saying that this is done. Now let's go and check the dollar index, where the price is very much firm, but it is facing resistance. So you can see it has started facing resistance, and most importantly, if you observe this chart closely, so this is the weekly chart for dollar, and you will see this is the third week in a row. This may not be visible. This is the third week in a row where it is finding big resistance near 94.5. So the zone between 94.5 and 94.7 or 94.8, let's say 94.5 and 95, will become a big resistance for the time being, because when you are either you don't go that way, or if you have already risen to 93 and 93 and a half, then you should make some big moves. But looks like it is started finding resistance over here. So the range where one can probably see the resistance is in between 94 and 95, 94 and a half and 95. If it sustains above that, then so this is the midway. So if it sustains above that, then you will have, then what you have here, two levels or probably three levels. So if it sustains above 95 in the dollar, then you have 100 and then 103 and then 103.5. But if the dollar started falling from this level, then you will have your support in between 89.62 and 88.38. So this is a very interesting scenario. Now let me give you a reminder that in the bull market of 2003 and 7, everything was moving up except dollar. And right now the same scenario you can see, where the crude is going up, the commodity is going up, the stock market is going up. You have good growth as far as the company's numbers are concerned. And what is not moving, or what is a range bound one, is dollar index. So if this is the same thing which is happening right now, then we will definitely have some very big moves going forward. But there are conditions for that. Technically it should not, dollar index must not move above 95, otherwise it will be in a bull territory and it will again started moving on the upside. In that case, the dollar can spoil the mood of the party, and if it started falling down, you will get further confirmation that it's going to move. And when your inflation is backed by growth, stock market are bound to move and move very quickly on the upside. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.